Hi, everybody. David Paparelli here, co-founder of M-Cultivo. Welcome back to the Cupping Table podcast, where the best coffee producers and buyers share their stories, insights, and outlook on the specialty coffee space. Usually. Today, we have a different kind of episode for you. I gave a talk at the Producer Roaster Forum in Guatemala in 2024 on auction buyer trends. It was a speed run through the impact of varieties, processing methods, and specific origins on the price of coffee. I bust a few myths during the talk, so listen in to get an inside look on what makes auctions successful and where the industry is headed. Feel free to pull up your video too. There's some slides involved, but I just thought you guys would be interested in what I talked about there. Enjoy, and don't worry, I'll see you next week in our normal format with an interview with one of the best coffee producers in the world.
So let's get into it. So we'll start with looking backwards before we look forwards. So this is a chart built by Specialty Coffee Transaction Guide. It's a project out of Emory. And what they do is they consolidate specialty coffee contracts throughout the industry. So it's about 10,000, I think, a year that they analyzed. Last year, they did about 15,000. But what they're looking at is score and price. So why is price important when we're talking about market trends? Well, if we are looking backwards to look forwards, price is a good indication of the value of attributes that go into coffee. So if I have a Panamanian geisha coffee that's an anaerobic 72 hours, that's several attributes. That's an anaerobic process, that's a geisha variety. Those would have values that would build into price. And that price that the market will pay is important to know if that's a upcoming trend, a wave, a blip on the screen in terms of a trend. We can kind of determine some of that. But looking at this, I found a few things interesting in terms of observations. That top yellow line, that's 87 coffees. You can see the prices there. The blue line is 83 coffees, and the green line is the New York C price, right? So you can see that the 87 coffees are almost uncorrelated with the market completely, whereas the 83 coffees are very much correlated, almost exactly. And I think the discussion to be had here is whether 83 coffees in the specialty coffee market contain similar attributes and value as the New York C price. I don't think they do. Commodity coffee, I think, and we'll talk about this a little bit later in the presentation, I think these are two distinct potential asset classes. And so we'll look at that a little bit later on as we discuss trends as well. So we'll talk about a few myths. I like to myth bust if we can. But one of the myths that is common is that auctions are irrelevant to the wider market. When people tell us this, we hear this from a lot of producers. When we hear this, it's usually talking about the really high-end coffee auctions that we host, right? Where, in effect, the ICE, the coffee exchange, the commodity exchange, is an auction in itself. A hyper-efficient auction, not to say that it's fair or that it's paying a price that's profitable for producers, but to say that it is an efficient auction. It is an auction that clearly, based on the last chart that we saw, has a huge impact on price in the industry. So auctions, I think, are absolutely relevant, even if ICE isn't necessarily or should be representative of the specialty coffee market. Why are auctions valuable? So as we look at these, as we look backwards to look forwards, as I said, we can start looking at auctions to establish some of these trends looking forward. So why are auctions valuable? We get some information from auctions. So we get data to actually represent where we might go into the future. So one piece of data we get from auctions is clearly price discovery. They're a really simple tool, right? Auctions are a simple tool that determine how much a buyer is willing to pay for a product. That product is made up of several attributes. We can then determine what the value of those attributes are. So processing method, variety, altitude, region, those are all attributes of the coffee. And through an auction, you can roughly determine what price you'll pay for those attributes. The other we already mentioned is efficiency. Auctions are hyper efficient. Our longest auction might be 12 hours, right? Some go to 3 days, some go for 1 hour. But a price negotiation with a buyer can take 30, 60, 90 days. I'm sure a lot of people in the room know much more about that than I do. A lot of experience in that, right? So there's these delays, negotiations, contracting, coordinating logistics. All of that can happen in an auction in a matter of 12 hours. So it's hyper efficient, even in the longest auctions. Another is that we're seeing in the specialty space is that it's an innovation hub, right? So in these high quality auctions, we start seeing the best coffees represented in a country like Guatemala or El Salvador, Panama, represented in these competitions and get stacked ranked. But the other benefit to that is that producers have the permission to try new things and then put those things in a real market scenario. So if I want to try a 72-hour anaerobic coffee on a specific varietal at a specific altitude, I can then put that on auction and I can determine, will people pay a price for that I think will cover my cost of production or be profitable. Now, there's a disconnect there, right? So if you're in a competition, there's a lot of other things at play there, not just the processing method, quality score, ranking, brand, those all play more. We'll talk more about that, but brand building being the last one. So if you're on display on an auction, those coffees tend to have some notoriety to them. So you have the opportunity to build a brand in the marketplace and have a lot of eyeballs, a lot of people watching the auction to see what the best coffees are, what the prices they go for. There's a lot of things there. So I think looking back to look forward, we can look at some of these attributes and say, okay, what might be to come by looking at these high-end specialty coffee auctions. Myth 2, auctions are always profitable. Our first step as an auction provider is to convince you not to do an auction because auctions aren't the right move for everyone, right? Some producers aren't ready for an auction. Some people don't have the global brand to support it. But the other aspect of this is that they're just a tool. You know, there's something to use in your portfolio to grow your business. They're completely unpredictable and there's no guarantee on price. And as of right now in the specialty coffee space, they only represent the highest quality coffee in the industry, right? So you have a load of cost of production that goes into producing an auction lot, and then you have an expectation on price. So those might produce a gap like this. And all in this gap between your cost of production and your expectation of price is risk. It's loaded with risk. And if you don't do it appropriately, you'll fall into that risk pool in that gap and you're bound to not be profitable. So it can be dangerous and something to look out for there. Just a disclaimer, because I don't want to continue to tout auctions without saying all that. So let's look at some trends now that we've gotten into that, establish sort of the historical thing. So some of the things we've seen in these high-end coffee auctions is what attributes might play a role in receiving better prices. Now, in a lot of this, again, this is the highest end coffees in the world, but there does seem to be some sort of trickle down effect from these trends. So we can get something out of the processing method, something out of the varieties, something about the scoring to be able to maybe set a new pricing benchmark for specialty coffee and give justification for where we might be going in specialty to receive better prices. So the first thing here we're looking at is the attribute that is process method. So process method that we're looking at is honeys, anaerobics, and naturals. And the control is washed, right? The target markets are North America, East Asia, Middle East, and Europe, as we looked at. So if you see a green arrow, like here in the, the anaerobic area in North America, that anaerobic process method would trade higher than a washed. What's interesting here is that the Middle East is up on all the processing methods. And what's even more interesting is you see a lot of blue dashes, meaning it trades about even with washed coffee. So that might mean the scoring is more important. That might mean variety is more important. That might mean the region is more important. But there's a lot of blue dashes. And so I think the indication there is there's a lot of focus on process methods in the industry. And if the process method isn't accentuating other characteristics, it's not going to receive a higher price. It has to polish the coffee. The process method alone as an attribute is not going to be the end all be all. And so the market trend that I might point to here is that process method will continue to evolve, but it's going to be more for polishing coffee. Here's another table. This time we're looking at varieties. The control here is other varieties, meaning if it's not Geisha, Bourbon, Típica, Catuai, Catamaor, or Pacamara, it would be another variety. It would be a pool of other varieties, and that would be the control. So again, the green areas of Geisha in North America would mean that it trades above other varieties. So a couple things here. Obviously, Geisha across the board is relatively up in most markets. That's not a recommendation to go grow Geisha. It's just an observation to say that Geisha trades higher than other varieties in most markets. And there might be a trend there to establish to say it would continue to do so. Obviously, you'd have to look at score, cost of production, and other things to make a determination on that. So just an observation. Middle East, why is it down in almost every category? That's really interesting. So the Middle East is hungry for other varieties. So other varieties being the benchmark or the control. Bourbon trades way down from other varieties in the category in the Middle East. This tells me that the Middle East is looking for novelty coffee. It's a really hard market to crack. So cost of customer acquisition is really high. They're looking for low volume and novelty coffee. How long does it take to grow a variety into a full production? A minimum of 2 to 3 years. That's a heavy investment. By the time you have that variety, it may no longer be novelty. It may no longer be sexy and trendy. So I'd be very careful at the targeting the Middle East market for that reason, because your cost of production is going to be really high and your cost of acquisition is going to be really high. And the market is going to buy very low volume from you in these categories. It also says to me that they're not interested in washed coffees in the Middle East from the prior slide. So if they're not interested in washed coffees and they're interested in novelty varieties, most of the coffees that you'll produce in 2 to 3 years, they are likely to trade at a lower price than any other target market or region based on what we're seeing. So just something interesting there for people talking about and targeting the Middle East market. So the myth here is producing better quality results in a better price. This has been common, kind of a common statement in competition coffees especially. This isn't true. Quality is super subjective. Quality and the attributes around quality are more meaningful to the market that you're targeting than they are. So brand position is more important than the quality of coffee you have. So if your coffee has various characteristics, processing method, variety, as we've discussed, you got to be sure that you're targeting the right market for that variety. If we go back briefly, you'll see here, this is a complete mess. Nobody agrees on anything in terms of variety. People trade up, they trade down, but there's no more than 2, I think, in here that agree, except for Cathy Moore. Everybody trades down on Cathy Moore, but it's a mess. Nobody agrees. Some trade up, some trade down on the same variety in different markets. So you can't have a global approach to selling coffee. You have to have a targeted approach to selling coffee, and that will bring better price. It's market positioning more than anything else. So let's talk about Panama briefly. I'm just coming off a trip to Panama, so it's fresh on my mind, but we're using it as a case study here to just see what we can do. But last year at auction, Panama sold in the best of Panama a lot for $10,000 per kilo. How is that possible? It's an absolutely outrageous price. Completely unthinkable even a year ago. But there were some strategic elements that I think we can point to get to explaining this price, and maybe some learnings to say it's not just a complete outlier. It's something that we could actually learn from. So it started with a cup of coffee on a table in 2004. And many of you are familiar with this story, but I'll try and kind of weave in some concepts here to get there. That cup of coffee on an auction table in 2004 was referred to as God in a Cup. It was a Panamanian geisha coffee, right? To get that coffee on that table, it was not a guarantee. A lot of luck had to take place. A coffee farmer bought a farm. It required restoration. The farm required restoration. It had geisha at lower altitudes. They replanted the geisha in higher altitudes. That geisha came from a government program in the 60s and 70s. The advice in the time was to plant other varieties. Why would you plant the government program geisha higher? So that's one thing to notice, is a lot of luck there. Then the coffee had to be harvested. It had to actually make it into a competition lot on a table. No guarantee there. Once it hit the table, it was cupped. And the year prior, in 2003, a coffee was removed from the competition because it didn't fit a classic Panamanian cup profile. In 2004, fast forward, they kept it in the competition even though it didn't meet a Panamanian cup profile. Interesting there, a lot of luck. And then it had to win the competition. A lot of luck there. But once it won, they determined that there was a pricing to quality. It got one of the best auction prices at the time, I think the best auction price at the time. And so the foundation of the system was a quality to price ratio that Panama could start the industry with. The next thing they did, immediately producers started buying up varieties in geisha and sharing and collaborating in a competitive environment to pour into this rising tide effect. It happened immediately. Fast iteration. And rising tide effect, the concept is a rising tide lifts all boats. And so one coffee, one producer does really well, and in a counterintuitive manner, potentially for some people, just because that one producer does it well doesn't mean all the producers do poorly. It means all the other producers started doing much better. So it was a rising tide that lifts all boats. And that community continued to pour into that collaborative competition over the years, sharing information and trying to build in their program. The other thing it did is they are bold enough to separate the best from the rest. A lot of coffee producing countries with Cup of Excellence, so we'll see this. But what this does is it pours into the rising tide effect, because you have the best producers stack ranked from the rest, and then the entire community benefits from that. So we saw that happen here. And then finally, they started professionalizing and building a global brand as Panama Geisha became its own brand, and they invested in that year over year. So really interesting case study here. And I would say the learnings from this, from a market trend perspective, is that these things are likely to become more prevalent in the industry as we move on and more necessary as survival and growth becomes meaningful. So let's go to the myth here that everybody has on their mind. So the myth is price classes are established by producing country. You could make the argument that Panama is just blessed to have good terroir, to have a unique position, that they struck gold, right? And that they are an outlier. And I think there's a good argument there. But I would say that beyond the outliers, so Panama, Yemen, Ethiopia might be outliers on one side to make an argument that they get better prices than other countries. They'll potentially on the other side get lower prices than other countries. All the coffee producing countries sort of in that middle tier, they roughly receive the same prices on auction, which is interesting, meaning the origin of where that coffee came from is less important than the other attributes of the coffee potentially. And they're competing with each other globally. And I think that's potentially a trend that could be established and move forward as we separate out specialty coffee from commercial coffee further. Okay, let's get into some predictions because that's why we're here. And I've got a couple minutes left, so I apologize if I move quickly. The first prediction, and these are dangerous. Predictions are always dangerous, right? Because if something goes right, it's going to look obvious, and if something goes wrong, I'm going to look like an idiot. So be careful with me here. But some predictions to look at: more SME coffee producers will build global brands. We've been in this coffee world for the last 25 years, but really longer than that, where coffee buyers are very separate from specialty coffee producers. And the distance between those two worlds is rife with inequality. There's a gap. It's a problem, right? We've all experienced this. And events like Producer Roaster Forum are trying to rectify this. Those worlds are now starting to come together. Events like this, technology platforms like M-Cultivo, they're bringing those worlds together, and those inequalities are starting to disappear. But as those worlds become one world and the world becomes a smaller place, these SME coffee producers, small to medium-sized coffee producers, now have access to markets they didn't have access to. And the friction that is in transactions currently is decreasing, so they can do business without having to build an entire container of coffee, for instance. They don't need volume anymore. Containers can be consolidated. Buyers can buy directly from farms in a more seamless way without having to go through multiple stakeholders to get there. So we're going to see more of that in the future. I don't think that's, especially as the next generation takes over, we're going to see more of that. There's innovation through process method. This is going to continue. This is already happening, not a surprise. But the processing method is an easier thing to change in real time. So it's what you can iterate on to polish coffees. Hard to change your varieties overnight. 2 to 3 years investment to get production. You have to wipe out and pull up trees. Really difficult to do. Processing method, you can iterate and change on a daily basis. You can change your infrastructure potentially on an annual basis, and that'll continue happening. And information's more widely shared between countries now. And so you'll see processing methods start to refine and converge as the world gets smaller. Geisha holds strong. I don't know if anybody's going to be surprised by that, but I think we'll see that. Again, not a recommendation to grow geisha, just an observation of what we're seeing. Coffees matched to markets. This is probably the biggest one on this list. Coffees are now treated as an art form. I have a sense that this coffee will sell well in the East Asia market, for example. It has these kind of anaerobic, vinegary notes that the East Asia market might like. You hear a lot of that kind of thing going on. Well, I think we'll get to a point where we're actually dialing in coffees based on data to target markets. So these attributes fit really well in North America. These attributes fit really well in Asia. You can expect this price for these value attributes at this score, kind of treating it almost like an espresso machine, dialing in that coffee for a target market before that end barista actually dials it in for the final customer. So that's going to become more of a science than it is an art form currently. So that would be one other projection there. And the last one's more hopeful, I think, than maybe a projection or a prediction. Is that can we decouple from the New York C price? And I don't know the answer to this. It's difficult because commercial coffee, the New York C price has such an impact on specialty coffee that it is a pure supply and demand equation in commercial coffee. With specialty coffee, we're talking about attributes and quality. That's what the price should be tied to. But the issue here is that we're going to have to take specialty coffee, which is now 10% of the volume of the total market and 25% of the value of the total market, and represent that as a new asset class. And there's going to need to be new benchmarks and greater sharing of information. So I hope we can. There's many ways to do that potentially. Something to be discussed. Auctions are one, but certainly sharing information and transparency is going to be necessary. And subscribing to a new benchmark will be absolutely necessary for that. Thank you guys so much for the time. And I appreciate you listening. I'm here around for questions. My contact information is up here. Feel free to reach out.